dieses Mal machen Sie eine Comeback. Sie möchten mit uns heute ein neues Thema behandeln, die Biodiversität und das in diesem Monat neu herausgegebene Standard, die NFD. Genau, dann an dieser Stelle möchte ich unsere Referenzen von heutigen Veranstaltungen vorstellen. Und bitte beachten Sie, dass die Präsentation auf Englisch gehalten wird. Und ab diesem Zeitpunkt dann werde ich auf Englisch wechseln. So please allow me to welcome Andre and Serhat from Clarity AI. Thanks for joining us today. And we are really excited to hear more about from your company, as well as from the concept of biodiversity impact, which is developed by the Clarity AI. So yes, please, now the stage is yours.
Und jetzt geht es nicht, oder wie? Doch.
Well, thank you very much. I'm going to take over at this point. Thanks also for allowing us to speak in English. We do have quite some people now at Clarity that speak German, including myself, also Swiss German. However, our expertise is not only in German. So Serhat Öngen, our head of biodiversity and new taxonomy, unfortunately is still learning German. So we still do this in English also to have the full capacity with us today. Serhat is going to quickly share a few slides on biodiversity and explain the whole concept. But before we jump into this, I would like to give you a short summary of who we are at Clarity AI right now. So if you've seen us a year ago, then a lot of things have changed. A lot of things have improved over time, and a lot of things have been added. And one important thing is that as of today, we are strong believers of the fact or the assumption that the time of ESG ratings is over, right? So in the past, when not a lot of data and methodologies were available, it was very good and easier to go to a rating agency and ask for an ESG rating, for example. But we believe that the asset management and wealth management industry is much more mature as of today. And what they really need is a tool set to make assumptions and to make decisions themselves. So, right, it's no longer need to go to a rating agency for a rating, but actually I am able to implement my own ideas, to implement my own methodologies and build my decisions based on that. And that's why Clarity AI is more and more becoming a solutions partner where you can use with data from us, you can use methodologies, and you can use our tools. But you don't have to use everything at the same time. You can work flexibly with the different aspects that we provide. And we're gonna talk today a lot about data and methodologies because that's what the biodiversity concept is based on. But obviously, we also do provide tools that facilitate the implementation of specific frameworks or regulatory requirements. Now, if we go to the next page, you can see overall who we work with in the investor industry. So on the left-hand side, you can see that a lot of asset managers and wealth managers are faced with the challenge of regulatory requirements, with product development, with portfolio management. And what they also need data methodologies and tools to do that, right? But then you also have the asset owner. So that's if you're an asset manager, if you're a fund, that's your client. But if you're a retail investor, this could also be your partner, where you have your savings, where you have your investments. Could be an insurance, could be a pension fund, or could be a platform where you have everything like a trading platform or investment platform, where you as an individual investor can also be active and make sustainable decisions. And all those combined, they have these challenges of data, methodologies, and tools. Now, on the next slide, you can see why this is important and how artificial intelligence, and that's included in the name of our company for a reason, because we try to facilitate a lot of the processes involved in gathering data, building methodologies, implementing methodologies, and making them available in an efficient way for users with AI, right? So we're not using AI to make decisions. That's very important. We use it to facilitate the process and to support human beings. This could be, for example, on data research, so very general, what data is actually relevant, and then going out and actually gather the data from industry reports, from quarterly reports, from sustainability reports, where data is still not very structured. I mean, there's a lot of processes going on to make it more structured, but it's still more of a marketing document, or these documents are usually still more of a marketing document, and one is different from another. And you always have to read the footnotes, because the footnotes, for example, define on EU taxonomy exactly which activity it refers to. And there, artificial intelligence and large language models can do a lot of the work. So they can go out and find and read all this information and structure it and prepare it for human beings to double check. And that's something that we do. And then once we have the data, we also use AI to run reliability checks. This could mean that we compare data points to other companies in the industry and see if that has changed fundamentally. Could also mean that we look at other metrics, other data points for a specific company. That could also change over time, could also change in a given year, and you have suddenly a peak in one direction and you want to know why that happens. But it could also be anything else. And that's why traditional machine learning is not enough. That's why you need artificial intelligence, because you actually, before you look at it, you don't know what is the reason for the data that has changed. And then if you don't find data, or you only find a part of the data set that you need, you can also use AI to do estimations, which is still a topic that is under discussion with a lot of the market participants, and some are against it, some are in favor of it. We believe that this takes time. We believe there's a lot of value in there, also because the AI models are getting better and better in estimating data points. But also we believe that market participants have to get used to it. I mean, if you think of the traditional investment model where you look at risk assumptions or risk estimates for the future when you invest, or return estimates or return assumptions, these are also estimates. The only difference is that we've gotten used to them, and we rely on them. And we believe that for ESG data, if you want to have a broad universe with a lot of data, and also a universe that probably not everybody has access to, you need to be able to work with estimates. And Clarity AI does provide a lot of capabilities in that area, and we offer it to customers that wanna use it. But it's never a black box, so it has to be very clear that it is an estimate. And then last but not least, if you go to the last slide of the introduction, just want to highlight that we are active in all the areas of sustainability. We do have the traditional approach of the financial materiality in the risk area, so ESG risk assessments and risk scores, controversies where we look at the companies from a more outside-in perspective. So what do they really do versus what they actually say? We look at exposures, and then the whole part of impact, which is becoming more and more important, both in the public and the private market, and the whole topic of climate. So climate, with all the frameworks that are out there, they're being refined, they're being improved. We cover all of it. We are active in all the areas, even TCFD, which is not very dominant in the German market yet. It's becoming more dominant in Switzerland, and we work with it in the UK. And then everything regulatory related. And as you can see, biodiversity is also on that list on the impact side. It's not only impact. There's a lot of things to consider on biodiversity and nature, but that's not my role today. So at this stage, I would like to hand over to Serhat.
Thank you, Andri, and welcome again, everyone. My name is Serhat. I am the product manager for our biodiversity and EU taxonomy solutions. Now, before I go into explaining the solution, I wanted to go over some housekeeping, which is basically explaining that you can ask your questions, I'm assuming in the Q&A tab in the platform in Teams, and towards the end, we will pick up your questions and try to answer them to our best knowledge. So thanks again for being here. what we normally start off with is a kind of a recalibration or a reintroduction of what we mean by nature and biodiversity, and sometimes you probably heard about ecosystems as well. So after establishing this, then we could move on towards the finer details. When we say nature, it's the natural world around us. It's the stock of nature. So it's the living organisms, from trees to animals to the natural resources. These are all part of nature. Now, biodiversity is the variability among the living organisms from all of these sources. It could be the diversity within species, between species, and of course of ecosystems. Now, an ecosystem is, well, it's a dynamic complex of plants, animals, and microorganisms interacting as a functional unit. So now that we've established them, let's put into a concept, or let's put it into an analogy that we all understand now that we're all in the financial industry. So if we were to use this analogy, it would be nature would be your assets, and biodiversity will be your diversification of your portfolio. And the level of diversity will affect ecosystems and degrade their services that are the main pathway to dependencies. Now that we have these established, these definitions, I know they're basic, but we need to kind of go over these because it's important, and sometimes people, when we interact with them, they think of other things when we speak about these terminologies. Again, the terminologies. I believe you all have heard about of the Task Force on Nature-Related Financial Disclosures, what they have done, and we'll get into that towards the end to compile everything that I will be going over, and we will be finishing off with the TNFD framework, but we will also be defining our solution set through the 4 core concepts that TNFD has defined. First, it says to measure your dependency and impact on nature. So a dependency is basically how much your business activity, if you're a business, is dependent on certain ecosystem services. The impact is the output of the business that negatively impacts that ecosystem or endangers the species. Now that after you define what dependency and impact are, you can then see or assess your risks. So any type of business activity, because it is so dependent on nature, then of course there's risk associated with the depletion or with the use of that natural resource. But of course, not all is negative. There's also opportunities that arise from this interaction. And so there are business activities that could provide an innovative solution to promote conservation and restoration of nature. Now, what we will go over today is packaged under impact or impact measurement. But of course, we also have a special methodology and data set to measure dependency, and of course, the risk associated with these. So I will first start with the dependency part. To measure the dependency, we have gone through various research and analysis, and we realized that we really need granular location-specific data in order to be able to measure the exact dependency of a business. And therefore, we chose Climate Trace. They are a global nonprofit coalition that specializes in tracking greenhouse gas emissions through satellite imagery and other forms of remote sensory technology. Now, Climate Trace has mapped over 7 million physical assets across some of the highest emitting sectors, such as aluminium, cement, and steel. And they use this asset level data to identify and report on nature-related risks. So what we have done is we have used the climate trace data, and we have identified which business activities are have dependency on nature-related resources. Now, for this, we used a well-known, globally recognized methodology, which is called ENCORE. You may have heard of it. We use the ENCORE materiality matrices to identify a business activities or company's dependency on ecosystem services that have high or very high materialities. For example, for a company in the oil and gas sector, they might be dependent on surface water, groundwater to cool down, for example, any type of production, flood and storm protection. So the location that their physical assets are dependent and are at risk of these flood and storm. And of course, the water quality. Now that we have analyzed or we have identified the dependencies, we can now use the satellite imagery data and of course the risk area maps that we obtain from various international organizations, such as the World Resource Institute. We overlap the location, the geolocation data of the companies and that of the physical risk areas. So now that we know the dependency, the risk area, so which type of risk are in a particular area, such as, let's say, water stress, which particular region or, again, geography has high landslide risk, these all fit into our geospatial data, and we overlay them and create this mega, let's say, data set. That at the end, what we can measure is the share of production of assets that are used, that can be used as a proxy for the share of revenues with risk dependencies on nature. Now, what does this all mean? So it's very text-oriented and it's very high level. Let's go into the visuals. Here, this is our web application, or it's not, of course, like my colleague Andri mentioned. This is only focusing on, for example, the dependency data set, but through our web app, you can also access different types of ESG-related or regulation-related products as well. In this case, you are in the dependency module page, and you can see a user has selected a company A, and that company is located, is in the business of oil and gas. The map that you see is the map I mentioned before. It's a flood risk area map. That red means that there's high probability of occurrence of flood risk or strain, let's say. And what a user can do is click on a particular physical asset of that company and see the overall risk associated to it. Not only the overall risk, but of course the breakdown of which risk are exposed, is this asset exposed to. But more importantly is the level of granularity that our data set has. We can identify how much that physical asset produces and the production share with respect to other assets of the company. And of course, not only would we know the amount of production, so let's say thousands of barrels if it's an oil and gas company, but also the percentage of ownership, that how much that particular company owns that physical asset. And so now that we know all of this, this facilitates a much more accurate assessment of dependency and risk. Of course, you're all, not all, but you are in the financial institution industry, and most of you have investments in various different areas and various different companies. And so you, thanks to our platform's capabilities, you can consolidate everything at a portfolio level and get a portfolio view with just one click. So here, as an example, you see your total portfolio risk, and of course, a breakdown of the risks that is associated only to your portfolio. You can, of course, then use different types of benchmarks and portfolios of your choosing to compare your risks to your reference benchmark. This is the final slide of our dependency solution. But of course, please feel free to ask your questions so we can answer them towards the end. Now, going into how to measure impact. As you know, impact is a different way, a different approach that measures a different thing. It's not part of risk or dependency. Impact requires a specific knowledge and expertise in its measurement, and therefore we have partnered with an expert in their fields. We have partnered with Gist Impact. So Gist Impact, the founder and CEO of Gist Impact, for those of you who don't know, was the former former president of WWF, and has been in this field for a long time in measuring nature, biodiversity, and its impact on finance and the economy. So what we have done here is we are using their knowledge and expertise, so their methodology, but we are combining it with our raw data and AI capabilities. So we use our own data because we have a very mature data set that is with high quality, that goes through, like my colleague mentioned, through various reliability models, and it's being talked over with many of our clients. We have a very strong quality data set that we use as an input into this impact measurement model. And at the end, what we measure is the final impact of a company. Now, I mentioned the raw inputs, but of course, those are measured, or those are categorized under different environmental pressures, or drivers is another terminology. So through which, let's say, categories of environmental pressures is the company creating an impact or negatively impacting? We have variety of inputs that is also industry leading. So we have 6 different drivers. The first is how much of a land transformation or habitat destruction, fragmentation the company has caused, the GHG emissions that it is polluting, that it is generating, air pollutants, so an increase in concentration of nitrogen oxide and sulfur oxide. These are 2 different inputs that we use. Water extraction, so the freshwater unavailability. Water and land pollution, so an increase in the concentration of nutrients such as nitrogen and phosphorus. And last but not least, waste generation, so how much the company is producing waste. These are now, after identifying and having the data for these are inputted into our model. This model is called the life cycle impact model. Now, to go into, for those who are a bit more into and experts in this field, it's actually an improvement or an expansion of the recipe model. And what this model has is basically a characterization factors of each of these drivers that measures 3 different types of ecosystems: terrestrial, freshwater, and marine ecosystems. And after the measurement, what we identify, or what we have, is the impact metric. This metric is called the potentially disappeared fraction of species. It basically measures the probability of the company's business activities impacting negatively or removing or reducing the species richness of the world. It normalizes, so it normalizes for the world. So it's any type of region around the world. Now, this also has another advantage, because you are institutions that invest in many companies in different locations. It's with the data that we have currently and with any of the capabilities that we have right now, it's not possible to measure each location's geographically the impact that the company caused and tie it directly to that company. Therefore, we found this impact measurements with the capabilities and with the models, the model that we use, which is very crucial in order to identify the power, let's say, or the quality of this metric. That's why it's important that you identify the model and the metric itself. Now, that's all great. Again, all high level or methodology, but what is it tangibly? Now, we're showing a spreadsheet because that's all us in the financial industry understand of, all spreadsheets. So here is a spreadsheet of the data that we have. And actually, we even have more that didn't fit into the screen, but I'll get to that. So in this example, you see is your ISIN, the company name, the sector of the company, the reporting year as well. With the reporting year, we of course give you various years of the impact of the company, so you can then make a better assumption or a better analysis of how the company is progressing over the years, which is a very powerful analysis, at least to start off your biodiversity analysis. And of course, then you get your total company impact. This is again measured by PDF, but because the measurement is measured on a global, the number that you get is pretty small. But of course, in order to facilitate your analysis, you can normalize it with different values. In order to give you a bit more content and context, we also calculate the peer percentile based on not the comparison with your portfolio, with similar companies in your portfolio, but with the universe of companies that that particular company relates to. So we have our internal peer comparison, and here, for example, we provide you in order to give you more power in your analysis. Not only that, not only the total company impact, but we break it down into different drivers, as we mentioned before. So there were 6 drivers, but we even break it down into NOx and SOx. So this allows for a more deeper understanding of where that total impact comes from. So in this case, in the first company's case, the majority of the total impact comes from greenhouse gas emission impacts or driver. And this, again, opens up the conversation with for example, for your engagement purposes, in order to engage with that company. It's a conversation starter, and you can go into that specific granularity. Not only do we give you, of course, these drivers, the PDF values, but we know how it's important to see if it's estimated or reported data. So we also provide you with a similar breakdown towards the right side of your spreadsheet, whether this greenhouse gas emission was calculated from the company reported data, or was it through our own estimation models. Again, this is to provide you with a more clear understanding and a more transparent. So we want to give you the power to be able to analyze and come to your own conclusions. Like my colleague mentioned, the scores at the end could be black boxes, and we do not want to provide a black box methodology that we do not have any control over, or that you cannot explain to your stakeholders either. So we know how from our experiences with other products, how important it is to provide you with this level of granularity. Again, in this impact measurement model, we can also additionally provide you with the exact raw data metrics that create these drivers. So because we also have our own data sets and we use it the measurement of this impact methodology, we can provide you with even the raw data that you would need to come to your conclusions. All right, so we've gone over dependency and risk. Now it's, and after that, we went into the impact data set. Now we can, I guess, go over the task force on nature-related financial disclosures. As you know, it has been a very, it has been like Taylor Swift's concerts. So it's been met with a lot of enthusiasm, and there was a lot of popularity around the final publication of TNFD. Now, what has happened, or what we have at least analyzed from after the final publication? What we see is they have stuck with their the LEAP process. We'll get into that, but it's basically the assessment. It's a framework to go over and evaluate various dependencies, impacts, and risks and opportunities. They have remained with that, and they have, of course, refined the 14 core indicators. Now, it's important to kind of contextualize this under the whole framework that they are providing. Now, the upside down pyramid to the left shows this in a very simple way. So you have the 4 stages of LEAP. These are the assessment metrics. And then at the end, towards the more triangle, upside down triangle, are the disclosures metrics. Now, each sector or each company will have a bit more different set of metrics that they would need to disclose, or they could also disclose additional ones specific to their sectors. For the financial institutions one, so we have zoomed in on particular ones for, we have clarified the ones, let's say, for the financial institutions, but just so you know, these are for all of the companies in various different sectors. So in the core, what is actually, let's say, important is are the core global metrics and what they, or how they have defined these. I will not go over the whole list, but just for you to know, there are 14 that fall under, for example, dependency and impact, and then the last 2 are more towards risks and opportunities. Now, these were for the global indicators that you have, that you can come across in the main TNFD recommendation report. But there's also, like I mentioned, specific sector ones that are, again, targeted for companies. And for the financial institution set, most of them have remained. There were no definition changes, but for example, for total spatial footprint or plastic pollution, for total spatial footprint and plastic pollution, and measures against unintentional introductions of invasive species, this has not changed, so it's parallel to the global indicators. But for the remaining, the other ones, the financial institution report has its own kind of definition tweak of these metrics. Now, the LEAP approach is a recommended approach of TNFD to help you prepare, let's say, at the end for disclosing for nature-related topics. The first phase is locate. So it wants you to locate interfaces with nature. How we can help in this is what we have gone over. So we're now combining all of our data sets to help you with this LEAP approach. So here we help you identify companies in portfolio based on look-through of securities. We have a very powerful security look-through. And of course, we have geolocation data of each of the physical assets of companies that you are investing in. Evaluate, so the next step is to evaluate your priority dependencies and impacts. What we saw just before, so listing, for example, of relevant environmental assets and ecosystem services. And how we help you is, of course, we help you with the impact measurement of portfolio level and at company level, but of course, identifying assets and related production data originating from high-risk areas. These are all part of the evaluate phase. In the assessment, or in the third phase, is it wants you to assess material risks and opportunities. So an example is nature-related risks and opportunities the organization should act upon. And how we can help you, or how Clarity AI can help you, is we can calculate, for example, the share of company revenues at risk, or from identifying opportunities that are defined by the EU taxonomy products. And of course, we allow you to do various types of comparisons with peers or any type of other sectors or any type of analysis that you would want. At the end, you need to prepare to respond and report. And here we have a very strong, because we have an experience with regulatory products and reporting capabilities, we target the same quality of experience. So at the end, you can download in the required templates for you to do the leap, for you to submit the leap, let's say, findings. So going into the TNFD metric categories, so the ones that we've mentioned before, the risks and opportunities parts, we're still fine-tuning these because there was a bit of a tweak, let's say, in last week's recommendations in the final version. But we have a solution right now that could generate a file for you that looks into various types of the core metrics that we've mentioned. So for example, the share of revenues at risk, that comes from our risk data set, but also the opportunities part, which we didn't actually go into because it's a whole nother, we can spend a whole nother session on what you define an opportunity as, but parallel to the TNFD recommendation on using taxonomies, we have used the EU taxonomy. We have a very robust product that has been already tested and, of course, used by very well-known clients. And here we also have the assessment or the data for the ability to assess whether the activity relates to the EU taxonomy's biodiversity and ecosystems objective. So right now in our EU taxonomy solution, we have this assessment. We can do the eligibility, is what is called, of this objective, and it could be used here to at least identify sources of opportunities. And of course, in the financial institution specific sector-specific report that the TNFD has published, it makes direct references to the SFTR PAIs. So again, we already have a solution, same maturity level, same quality level that we are using in this TNFD data set. So again, like my colleague mentioned, nature and biodiversity is a whole jungle of, pardon the pun, but the jungle of data sources and data sets and methodologies that we need to do, that you need to take into account. Unfortunately, there is no CO2 equivalent. There's different methodologies and different data sets that you need. But at least because of our position with other products, maturity of, and the expertise that we have in sustainability, we can leverage those knowledges and data sets, and we are using it in for example, in this TNFD solution that we have. So how does this all fit together? Well, again, visually, we will have a breakdown, and this is, again, just a sample visual, but a breakdown of your core metrics at portfolio level, that, as the TNFD suggests, calculated for you. and after that, you can do deep dives into that particular metric. So for example, and this is the impact metric that we calculate, and you can go into the impact numbers per company and see how you are and see the rationale, the reasoning behind that particular number. And of course, then you could download this or create a Word document to show this, your TNFT calculations, and share it with your stakeholders and do further and create further conversations around this. Again, TNFT is currently just a framework, it's a suggestion, but we expect, or the industry expects, that it will be very fast, in a very fast way, adopted by various regional or local like regulations or standards, and be used similar to TCFD, so the climate sister framework, let's say. And that's why, and the velocity of adoption of the TNFT framework is expected to be much faster than the TCFD. So it's very important that everyone everyone interested is on top of this, and that they are prepared for this. Maybe you don't want to disclose, of course, publicly. That's totally fine, but at least be prepared internally for your how you fare according to these metrics. That was all from my side. Thank you so much for listening, and I believe now we can go into the questions. Hopefully easy ones.
Yeah, we have 3 questions as of now, and the first 2 are focused on the PDF. I'd say not so surprising, because that's often a question that we get, obviously, because there is on the one hand, there's another metric that is being used, which is the mean species abundance, which is also mentioned in the second question. So a question to you, Serhat, would be, why did we choose the PDF? And then secondly, have we compared the results, and I assume the results of the outcome, because the scale is not 100% the same. Have we compared MSA, so mean species abundance, with PDF, and is the outcome similar?
Yeah, that's a question that we come across every day. Now, what I want to frame it is, the TNFT has recognized both or more metrics as impact measurement. So it's recognized, it's not something that we created. But these metrics measure different things. So they're not measuring the same thing. They're not measuring the same thing. What mean species abundance measures is, well, the abundance, the volume, how much the abundance of species, the volume of species has changed, has deteriorated from a pristine state of environment, pristine region, let's say. You take land, and that land is, if no intervention, if no humans were there to intervene with it, what would it be? 100%, let's say. And then it calculates the difference, right? It calculates how much it has deteriorated over time, and how much the number of species has gone down. Now, and that is given in a different ways. Different providers give provide different ways to measure it, and they use different models to measure it. And that's very important. That's why I kind of said that the models are important here, not the metrics themselves, not PDF or MSA. What PDF measures is, well, like we mentioned, if your business activity, if you continued your operations, how much of the world's species would go extinct in the future. It's a global, or the one that we have at least. Again, these metrics have different let's say, representations, but at least the one that we are using for PDF is a global one. Now, what that means is, if you were to measure a species extinction probability or extinction risk in a certain region. Let's say you are in Germany, but that same species, and if let's say the company or the measurements you have is there's complete species extinction, so there's no life at all in, let's say, in that particular region. But other species might be living in Amazon, in the forests of China or somewhere else. So it doesn't really capture the reality of your impact on the world. So what it does with this particular PDF, the one that we have, is it measures the actual risk that the company is contributing to, or through its drivers, through the pressures, how much is it contributing to global mass extinction, let's say. So the numbers themselves, and kind of going into the second question, sorry, I think there was other ones, is, and sorry, why did we choose PDF? Well, because with the data that is available right now for financial institutions that has different investments, large investments in various parts of the world, the model that we are using, the LC impact model, was the right choice, was the more, let's say for us, was the correct choice to go with. And again, you really need to go, and this is what TNFT also mentioned in its footprinting workshop the day after the release of version 1, was that there's this contextualization problem or issue in the sector about footprinting measurements. And we are totally aware of that. So again, we are in the very early stages of biodiversity and nature measurement. We are not saying we have your solution. We have a silver bullet, as they say, of a solution. That's not the case, and we are aware of that. But it's the first step towards a more, let's say, more accurate estimation of your, or let's say, yes, estimation of where, how your portfolio compares. All of the tools that you would be using are different levels of certainty or different levels of estimations. Again, it depends on which company, which sector you're looking in. Some sectors have higher certainty, some have lower. But that's the case. For the MSA, for the ones that we have seen come across so far, is that the model that they were using was based on higher estimation assumptions than you would need for, or that you can get compared to others. I guess next question, or
yeah, that's I just wanted to add maybe to the MSA and PDF discussion is, I think it's important to just understand that these are different ways of assessing it. You said it already, but also the scale. For example, if you have a 0 for MSA, means that the original setup of the biodiversity is gone. Doesn't mean that biodiversity is gone. Well, for PDF, a totally disappeared fraction means that it's all gone, right? So it's a bit of a different assessment. Hopefully we'll never get there, but it's also different scale that we look at. Serhat, question to you. What do you think about the ELAP? I'm sure you've heard of it, the ELAP approach versus the LEAP approach.
Yeah, I guess it's the PBAF recommendation. I mean, we're following the TNFT for now. So that's that's what we are focusing on. But these are just approaches or frameworks. So what we want to provide you is with the data that you would need. So ELAP is similar, at least in terms of concepts. We want you to provide you with that. So you can either incorporate ELAP or LEAP. PBAF and TNFT are, I know there were representatives in many of the workshops that we were part of as the Data Catalyst group in TNFT. So these are similar, and they're all try to be aligned. So that was kind of the main, let's say, topic that everyone was happy about. TNFD was aligned with ISB, SASB, and so on. So all of these frameworks, and it integrates into SFDR, EU taxonomy, like I've said. So these frameworks are aligned within themselves, more or less. Again, I'm speaking high level, and we want to provide you with the data necessary. So if there's any particular data that that might be niche, but we could derive, we can also provide you, we can talk and provide you with that as well.
Now, another question that we got on scenario and pathway analyses, whether we have something like this in our tool already, or we plan to add it going forward.
We're following it closely. It requires, again, from the TNFD, for financial institutions, I believe, from what I recall, I'm still reading through the documents, it was a bit more limited on how to measure, scenario analysis and so on. You need to make a lot of estimations and assumptions. So for now, we don't have it. We have one for climate, I believe. So that's another product that we have. Yes. But for nature, we're still in nascent. So we're still in the early stages.
Okay. If we have more questions, please add them to the chat. Otherwise, we would wrap it up here, I'd say. Let's see if there are other questions coming in. Any questions from your side, Han or Lisa? No? Okay.
No, it's fine from our side. First, I would like to know if there are also some questions coming later. How can people contact you guys? We can provide your email address, I guess, yes, or the interested people. Okay.
Correctly. So you can share our contact details. We'll make sure you have everything available. You can reach out for just discussions on the topic with Serhat and the team. You can reach out for specific questions on our technology, our product. We're happy to have that conversation on a strategic level, on an operational level. We're still fairly new to the German market, so any contact is valuable for us. So please feel free to reach out.
Thank you. Yes, so I suppose we can wrap up our webinar today. So thanks again, thanks Serhat, and thanks Andre for your presentations. As you can see the comments in the chat, it's very helpful and very informative. So I please allow me to switch again into German. So I just want to share the last information. Also herzlichen vielen Dank nochmal alle Teilnehmerinnen und Teilnehmer an der heutigen Veranstaltung. Und genau, für die kommenden Termine dürfen Sie sich das schon in Ihren Kalender vormerken. Am 26. Oktober, dann dürfen wir die Climate School zum Thema Klimabindung on Board begrüßen. Und dann am 23. November, dann steht das Startup Freezer Carbon mit dem Thema Carbon Credits auf dem Programm. Weitere Informationen dann finden Sie in den beigefügten Links. Und genau, und im Anschluss an die Veranstaltung werden wir Ihnen die Präsentation und auch Links zu der Aufzeichnung zukommen lassen.